So good morning again, and the sharing screen now function is available. So I'm going to take this chart to its totality of what we see on the screen, because I think it's a very, very good lesson to what happens. Okay? Now, we get to the point to where the market shows some buying here, and that's good. That's a good bar. If you go across a couple more bars, we have a market that has poor closes. Okay? So we can consider this our reverse absorption. A reverse absorption doesn't necessarily mean that the market is bearish as far as trend wise. It just means the market needs to go lower before the market goes higher. Okay? So the poor closes after the high is reverse absorption. It just may mean that you may have to test down to an area of a lower support, not a negative sort of statement. Okay. Let me put up here for everyone to discuss. Okay. So mark comes back down, and our first logical place where this would come to support would be right here. This is a retest of a buying bar. What you can see, it gets very sloppy here. What can we tell about the retest of this bar? We have to see the reaction. Why? Because a reaction from a bullish bar is a place that we want to look to try to buy the market. Market comes down with large range. Then the market tries to spring the buying bar. Does a poor job in doing it. Now, we're still bullish, but we still have to look at the market as it still has to perform at lower levels. It still has to be bought at lower levels. It still has to be accumulated at lower levels. Well, market tries to go up, it gets slammed down. It's a very important part of the sequence. This bar right here tells me that there's selling of the rally. Why? Because we have a market that is larger range and larger value at resistance. Makes a negative statement. Once you make a negative statement, you have to have a positive statement. Well, afterwards, it takes 1, 2, 3, 4, about 6 bars to retrace that 1 bar. That's all well and good. This is a nice retest here. The line in the sand, or the significant bar, would be the reaction upside from here, because it's a retest, an increasing volume. So there should be buying here to propel you to higher. The next bar is the kiss of death to me. Market goes down, shows that this wasn't a spring, and now the market shows bearishness marking down. Now, once we have that selling, red bars have selling in the market, we are now defensive in the market. So we are no man's land. Remember, when we first break, we have a trading range that occurs after markdown, after the rally. Market goes sideways, cause versus effect, right to the market. We have spacing. If we draw a line based upon this selling bar, we draw that across. We see tremendous opportunity. The first retest and the close, this would be your edge to sell right here. Now, in this case, you could have sold it on the close, more conservative, or you could have sold it here on the rally back up with a stop above here. Be more conservative, I probably would wait. We're short from here, our stop would be above here. Now, what do we have here? We have negative background, we have spacing, and we have an upthrust edge. All the ingredients you want. Market then breaks. Now we have cluster closes after the break. The cluster close after the break is a lack of demand. Okay? A lack of demand. Market's down here. Now we see increasing volume, but decreasing range. Very significant. This now becomes the SOT, or the shorting of the downward thrust, against support. We love that. Now, we know that we're negative, so I would wait for another retest or two to make sure that all the selling is out of the market. The market rallies, then forms a little up thrust here, which I would not take here because I have calls built here, and I wouldn't take it. Now, if someone did decide to take that trade, obviously the protection would be above here. You hold on to it. But remember, you're short from up here. So this to you would not be a place you sell. You would have to sell the secondary test, buy the secondary test. Then the market does something important. One, market tries to retest, increasing volume, close off the low. Two, market does the same thing, okay, with increasing volume. This is bag holding. A shorting of thrust, bag holding right here. So now we have shorting of thrust, a little buying. This is called accumulation. Okay? That doesn't mean the market's going to go tremendously higher because of the background, but it looks like the market may go higher. It's this bar that you want to cover your short. Okay? Being long is aggressive, but you can do that because your risk is so small. So here, your risk is so small. There's your stop. The risk is so small compared to the range here. Either you're right big, and this is accumulation, or buying on balance, or it's distribution to make lower lows. Okay? Now, what am I looking for? I am looking now for a demand bar to show that this buying on the break is true. That it's just not short covering. The next bar gives you that. What can I expect from this bar? At least a retest to the top of the creek. Think trading ranges. There's no supply that comes in here. Shorting the thrust makes a positive statement. We expect the market to go back up to the retest of the bar. I would sell this bar here. Why? Because I expect the trading range. If the market goes up more, then I'll buy the break. If the market comes down a little bit, I'll do the same thing. But I'm anticipating buying until I see some type of sign of strength. Is this possible sign of strength? It is. But let's see how the market plays out here. But this could be a sign of strength, right? On the right-hand side of spacing. Comes back down here. And now we're right here currently. Okay? Now, I would like to buy the market here and put the stop under here. Now we have more spacing. We don't have supply, and now we have a market that's ready here to kind of have a shorted downward thrust, close to the downside, and this make a back up the test. So you see several instances here of market strong, reverse absorption, lower. Since this larger range now forms the trading range, and the spacing going across, the first retest of a selling bar is an edge. This is showing your thrust. Keep that in mind. This is too early, and this bar right here is like a springboard to the bottom. Not a springboard, right? But it's a spring. See, this is Wyckoff's favorite spring, remember? Right? Usually the market trend is up, but look at that thing. Look at the volume. Look at the smallest range. It's aggressive, but your risk reward to buying this trade right here is tremendous. Risk reward. Now, you may not like that trade. You may want the market to give you more upside before you start getting long. Okay, that's fine. But if you're aggressive, but once this bar comes here, once this bar happens here, the rest of the stuff is easy because it tells you that you got your demand bar, which you need to prove it. Unfortunately, there wasn't a real good buy opportunity-wise. Cool. And now we're come to the LPSY area, which will be here to about here. We look for ending action. It's a live chart. We don't know what's going to happen. What we do know is we're looking for stopping action, bag holding, a spring, or some type of action. And we'll see how that plays out. I would probably like to buy the market here for retest higher. And that concludes that particular lesson.